If you have a low credit score, you can sometimes see movement within 30 days. Let me ask you something. Have you ever went to apply for an apartment, get an auto loan, get a cell phone plan, and they looked at you strange just because you don't qualify? That feeling is awful, and it's way more common than you think. Here's the thing though. Your credit is not some mysterious number that you're stuck with forever. It's more like a report card, and with a report card, you can improve it. In this video, I will show you how to build your credit score fast. Step-by-step instruction with no confusion, finance jargon. Whether you're starting from zero or you're trying to climb out of a rough patch, stay with me. This one is for you. And yes, stick around to the end. I got tips that most people simply overlook, and it can move your score faster than anything else on this list. Let's go! What fast actually means. Before I get into the steps, I want to be straight with you about something. Because there are a lot of misleading stuff out there, fast doesn't mean overnight. You're not going to go from 0 to 800 in a week. Anyone's telling you that is simply lying to you or trying to sell you something. What fast actually means is this. If you have no credit history at all, you can have a real scoreable credit history in about 30 to 60 days. If you have a low credit score, you can start seeing some kind of movement within 30 days, if you make the right moves. If you have an average score, targeting the right few items on your report can push your score higher within a few months. Your score is just a 3-digit number, somewhere between 350 and 800. That tells lenders things, can I trust this person to pay me back? The higher the number, the more opportunities open up. And getting there is about building a few good habits in the right order. That's what I'm going to show you today. I know what some of you are thinking. I don't need credit right now. So does this really matter? Yes, and here's why. Your credit score just doesn't affect loans and credit cards. It affects your everyday life, which people don't realize until it's too late. A good credit score will always help you get approved for an apartment because a landlord almost always checks your credit. It determines interest rates on car loans and mortgages. And, I mean this literally, two people buying the same $20,000 car can end up thousands of dollars apart in total payments just because of your credit score. It determines whether you can get a cell phone plan without a deposit, whether you qualify for a better credit card offer, even whether your insurance premium goes down. Yeah, in a lot of states, insurers will use credit data. So this isn't about just some numbers. Now, let's talk about what moves the number. Once you understand this, everything else will click. There are 5 things that make up your credit score. Payment history, the big slice, that's 35%. Credit utilization, that's 30%. Length of credit history, that's 15%. Credit mix, that's 10%. New inquiries, that's 10%. The top 2 is payment history and utilization. Together, they are 2/3 of your entire credit score. Everything in this video is built around those 2 factors first. Let's get into it. Step 1. Pull your free credit report. Before you do anything else, you need to see what's actually on your report. Go to annualcreditreport.com. It's the official government-backed site. Pull your report from all 3 bureaus, Equifax, Experian, and TransUnion. It's completely free and it does not hurt your credit. When you get them, you're looking for 4 things. Accounts that are not yours, could be fraud or clerical mix-up, late payments you don't recognize, balances that look off, accounts you already closed that are still showing as open. Here's why this steps is so powerful. Credit report errors are shockingly common, and if one is dragging your score down, disputing it can get it corrected in about 30 days without changing anything else about your finances. You can't improve what you don't know about. Start here. Step 2. Pay down your card balances. If you already have a credit card, this is your fastest win. Credit utilization. This is the percentage of credit limits you are actually using. It makes up 30% of your score and it updates every single month. The magic number to aim for is below 30%. But honestly, under 10% is where the best score lives. Here's what it looks like in real terms. Say your card has a $2,000 limit. If you're carrying over an $1,800 balance, that's 90% utilization, and your score is taking a beating because of it. Drop the balance to $200. Now you're at 10%, same card, same limit, completely different story. And the beautiful thing about this step is the speed. Lower your balance before the next statement close, and you can see your score move within 30 days. Step 3, become an authorized user. This is one of the shortcuts most people don't know about, especially if you're starting with little or no credit. Here's how it works. If you have a parent, a partner, or friend with a long payment history, low balances, 0 late payments, ask them to add you as an authorized user. You don't even have to use the card. Their account history get attached to your credit file, and your scores can start reflecting that positive history in as little as 30 to 60 days. What you want is an account that is at least 2 years old, with a utilization of 30% and a clean payment history. Have that conversation. Most people are willing to help when they find out it costs them nothing. Step 4, open a starter account. If you're starting completely from scratch with no credit at all, you need to create a profile, and that means opening up your first account. Quick but important distinction here. There's a difference between credit building and credit repair. Credit building is creating new positive history from zero. Credit repair is fixing damage that's already on your report. If you're brand new to credit, your job is building. The 2 easiest ways to do that: secure credit cards. You put down a small deposit, usually between $200 and $500, and that becomes your credit limit. Use it for small recurring purchases. Pay it off every month, and your on-time payment start building your file. Credit Builder Loan, offered through some credit unions and some online lenders. You make a small monthly payment into the savings account. At the end of the term, you get the money and the track record. Start with one. Don't overthink it. The goal is just to get something started reporting to the Bureau. If you like what you heard so far, please hit that like and subscribe button. This only takes a second. And hey, real quick, if you want a simple checklist to follow alongside with this video, I put together a free credit building guide that walks you through each of these steps one at a time. Link is in the description. Grab it. It's free. Okay, back to the steps. Step 5, never miss a payment. I'm going to say this clearly because it matters that much. Credit history is 35% of your credit score. It's the single biggest factor, and one missed payment, just one, can drop your score anywhere between 60 and 100 points. This is not a typo. 7 years for one forgotten bill. So here's my advice. Don't rely on memory. Build a system. Turn on auto pay for at least a minimum payment on every account. Set a calendar reminder a few days before each due date, and sign up for text alert from the issuer. Even if cash is tight, paying the minimum every month can protect you and protect your credit. Log on to every account you have, turn on auto pay, and do it today. Step number 6, be careful with new applications. Every time you apply for a new credit card or loan, a hard inquiry goes on your report. But if you apply for 6 cards in 2 months, that's a problem. It signals desperation to lenders and drops your score. The rule: only apply when you genuinely need it. Space application at least 3 to 6 months apart, and use pre-qualification tools when you can. They let you check the chances without triggering a hard pull. 7, keep old accounts open. Here's one thing that catches people off guard. You might think, I don't use the old cards anymore. I'll just close them and simplify things. Closing old accounts hurts you in 2 ways. It reduces your total available credit, which raises your utilization, and it can shorten your average credit history, which is also a scoring factor. Keep old accounts open. Use them for small purchases. Pay them off once a month. That's all you need it for. Step 8. Track your progress with apps. The last step is simple. Just measure what you're doing. A good credit monitoring app gives you regular scoring updates. It alerts you when something changes on your report. It breaks down exactly which factors are helping or hurting you at any given moment. Looks for apps that update weekly, flag suspicious activity, and show you your score breakdown factors, not just numbers. A few popular free options: Credit Karma, the Experience app, and Credit Sesame. Most take about 5 minutes to set up. Download one, set up the alert. Catching a problem early can save you months of recovery time. Before I get to the pro tips, let me quickly run through the mistakes I see over and over again. Carrying a balance because you think it builds credit faster. It doesn't. You don't need to pay interest to build credit. Pay your card off in full every month. Missing a payment even once. We already covered this, but it's worth repeating. Put everything on autopilot. Seriously. Opening up a bunch of accounts at the same time. Every application is a hard pull. A wave of new accounts drop your average account age. Space things out. Closing old cards. We covered this too. Keep them open. And ignoring your credit report. One wrong entry can cost you points for years. Check it, fix it. One more thing. A lot of beginners ask, how many credit cards shall I actually have? Start with 1 or 2. Get really good at managing those. Then expand if that makes sense. Quality of management beats quantity of cards every time. Pro tips. All right. Here are the moves that go beyond the basics. Pay before your statement closing date. Most people know they need to pay by the due date, but here's what they miss. Your card issuer reports your balance to the credit bureau on the statement closing date, which is usually a week or 2 earlier. If you pay down your balance before that date, a lower number gets reported. Lower reported balance equals lower utilization equals higher score. Same month, no extra effort. Request a credit limit increase. If you had a car for 6 to 12 months and you paid on time, call and ask you to have a higher limit. If they approve it, your utilization drops immediately without spending any extra. A lot of issuers would do this with a soft pull so it won't ding your score. Dispute errors fast. Don't wait. If something is wrong with your report, go directly to the bureau reporting it and file a dispute. Moving one inaccurate negative item can shift your score meaningfully. Keep every card active. A completely unused card can eventually get flagged as inactive and stop being reported. One small purchase per month, pay it in full, keeps it working for you. All right, let's bring it home. Building your credit score isn't complicated. It's consistent. Pay on time, every single time. Keep your balances low. Don't apply for new credit unless you need it. Check your report and fix errors when you find them. Track your progress so you know what's working. That's the whole game. You don't have to be perfect. You just have to be reliable. And you have to start. Here's your homework. Right now, before you close this window, do one thing. Just one. Pull your free credit report, turn on auto pay, or download an app. One move totally builds momentum for everything else. If this video helped you, hit that like button. It helps this channel reach people that needs this. Subscribe if you want more content like this. And that free Builder Credit checklist I mentioned, it's in the description below. No catch. Just a simple tool to help you follow through. I'll see you in the next one.